ますので、QA がなければ早めに切り上げて移行するかもしれませんし、ぜひ積極的に、お話しいただければと思います。では、ちょっとあまり私が時間取りすぎないうちに、プレゼンテーションに移行できればと思います。So, without further ado, let's get started.
Thank you very much,
Over to you.
Masato-san. And well, thank you very much, SBI, for hosting us, Glenn for organizing the meeting, and you all for attending. It's a pleasure to be here. And my Japanese is not so great, so if you allow me, I will do the presentation in English. And in the next 30 minutes, I have the pleasure to tell you more about Lightrock, our firm, our approach to ESG and impact investing, and how Lightrock transformed from only being focused on private equity impact investing to also now apply the same approach or a similar approach in the listed space. Before we do that, I will introduce myself. First, my name is Chris Kaashoek. I joined Lightrock 2 years ago because only 2 years ago, Lightrock decided to expand from private equity into public equity investing. And my team was hired to establish the listed equities business at Lightrock. I have been working in the financial industry for more than 20 years or about 20 years, both in private equity investing and also in public equity investing. So I have seen both worlds. And we now at Lightrock try to combine both the private equity mindset, the long-term oriented mindset to the listed space. I today work at a company called Lightrock. Lightrock originates from LGT, and LGT is a very large private bank and wealth manager in Europe, and it's fully owned by the princely, the royal family of Liechtenstein. 20 years ago, the family decided they wanted to do more on welfare, so they started philanthropic activities. But they soon realized that it's a more sustainable strategy to not only give money away to welfare and philanthropic activities, but to invest in companies that both make a positive financial return, but also have a positive contribution to the environment and to the social characteristics of the society. And that is how Lightrock transformed from philanthropic activities to a private equity impact investor. That was in 2009. In 2021, Lightrock became an independent company. So we were carved out from LGT. We are still majority owned by the princely family. The princely family is still one of our bigger clients, LPs. But we became an independent company. And the idea was that if you are independent and you need to determine your own direction, you can be more focused and you can generate more impact. That was the idea why Lightrock became an independently carved out company from LGT, but still supported by the broader LGT organization and by the royal family. In 2022, Lightrock decided to expand from private equity into public equity in order to have a more broad-based impact, not only to be focused in the private equity space. They were looking at publicly listed companies and identified opportunities to capture more impact also on the listed front. So that's when they reached out to me and my team. And over the last 10 years, I have been working with the same team, investing in listed companies, but we only invest in listed small cap companies, smaller companies. And the definition of a small cap in the listed space can be a little bit misleading because by no means these are small companies. We look for companies with a minimum market capitalization of $500 million. And we can even invest up to 15 billion. So we have a very broad spectrum of investment opportunities. So we started conversations with Lightrock, and we decided to leave our former team and to join Lightrock to build the listed equity business at Lightrock in 2023. And last year, we launched the first small cap strategy. Lightrock Group is bigger than only our fund. As I mentioned, it started with private equity investing, growth equity investing, as Masato-san also mentioned during the introduction. Today, we have 6 offices globally and about 130 people within the firm, and the headquarters is based in the UK. All the offices are dedicated to private equity. We are based in the Netherlands, and we are only focused on listed equities. We have one dedicated ESG and impact team supporting all the investment firms, and they are based in Switzerland, in Zurich. We realize that just being on our own is not good enough. We can learn from collaborating with other financial parties, impact investing platforms. So we have been seeking industry collaborations over time. There's a few on this slide. You will see that, for instance, we have become only recently a signatory of PRI. We are part of the GIN, the Global Impact Investment Network initiative, where we have been on the steering committee, to talk about impact measurement and also impact measurement in the listed space. And soon we will be part of another steering committee too, to talk about how we can collaborate with other financial players to think about how to integrate ESG and how to integrate impact. So we like to see collaborations. That's also why I like to be here and to hear from you what your opinions are, what your lessons learned are. So by just collaborating and sharing best practices, we can all get better, we think. And in my mind, we are just in the early innings of developing impact integration, impact measurement, and impact investing, especially in the listed space. We have seen that ESG has become more common, at least that's what I see in Europe. I also see it in Japan. I also see it in the US, but impact investing is more early stages. I already mentioned that we launched a global small cap strategy. I will not elaborate too much about it during this presentation because I want to focus on ESG and impact. But I will briefly tell you about our philosophy because it helps to understand our perspective on ESG integration and our impact thinking, because we invest in smaller cap companies. And that means that many of these small cap companies are typically overlooked. All the bigger pension funds, they invest in large cap companies. Well, you have many famous large cap companies in Japan and also globally, like Meta and the likes. But that is not what we focus on. We focus on the smaller cap companies, and that means that these companies tend to be overlooked by investors and under-researched by equity analysts. And therefore, we have noticed that we can be very close to the companies that we invest in. We talk to companies a lot, at least every quarter. We have discussions with the companies, and we talk directly to the management teams, to the CEO and the CFO, so the real decision makers, and even sometimes to the non-executive directors or the outside directors, also in Japan. So that is what we do. We are long-term oriented. We are not a hedge fund. We are not an activist. We are long-term active owners. So we try to be as supportive as we can be as a long-term supportive shareholder of the companies that we invest in. And because small cap companies are overlooked, under-researched, and we have seen a trend towards passive investing, we have noticed that companies are very receptive, very open to enter into a dialogue with us. And building that relationship always takes time. During the first meeting, we never give advice or suggestions simply because we don't know the company. So the first several meetings, we just learn. We just start to ask questions. We learn more about the company. And as our relationship builds, we start to give things back to the company. And that is how the dialogue and the relationship builds and how we can be effective in our engagement. And I will talk about engagement later. We invest globally, but only in developed markets. And today we own 60, or we invest in 60 stocks. The majority is invested in North America. 60% of our portfolio is invested in North American stocks. 30% is invested in European stocks, and about 10% is invested in Japan. Let's move into the main topic of today, our approach to ESG, integration and impact investing. When I look at it, or when we look at it, in our mind, ESG is about mitigating sustainability risks, and impact is also about capturing opportunities, capturing growth. Both are important to us. First, on ESG, it's fully integrated in our investment approach, and I will show you later how we do it. Based on exclusion, we have our own ESG scoring methodology. We actively engage with the companies that we invest in. And as a shareholder, we have a voting right, and we actively use that voting right. We have our own ESG scoring methodology for the E, the S, and the G. So for every topic, environmental, social, and governance, we have a full detailed questionnaire, and we analyze these companies. The outcome is our own proprietary ESG score for each company in the portfolio. And that is ranking from 1, being very low on ESG, to 5, being very good at ESG. We don't invest in companies that are below average. So companies that get a score 1 or a 2, we don't want to invest in. We aim to invest in companies that are leading on ESG. So they need to have an above average rate, 4 or 5. However, by just investing in the best companies, we realized we don't make the world necessarily a better place. We have an active role as a good steward of our clients' capital, investing in companies to try to make them better. So therefore, we decided to also invest in companies that are medium. Sorry, I've been talking a lot. That are medium, so have a score of 3 out of 5, but only when there's a clear engagement strategy to bring these companies to best in class, to make them an ESG leader. So there's a very clear engagement a case in that specific for these specific investments where we need to see improvement. That improvement is determined beforehand and also needs to be realized within a certain time frame. If these companies cannot make those improvements, we ultimately divest. That is the benefit of investing in the listed space. Every day we can add to our position or we can reduce our position, which is different in the private equity space. So on ESG, our idea is to invest in leaders or companies on the path to become ESG leaders. Then on impact, we adopted Lightrock's impact framework where we quantify and measure. So we identify, quantify, and monitor impact, positive impact. We don't do it for all the companies, but only for companies in our portfolio where a reasonable amount of their revenues is being generated by products and services that have a positive contribution to either the environment or social characteristics. So we set the bar relatively low. 20% of revenues is not a lot, you may say, But the reality is, in the listed space, we see quite a lot of companies that are more diversified. And therefore, it's more difficult to find the pure play, hardcore impact case. We do have some in our portfolio, but not necessarily that needs to be the case. So the hurdle is 20%. And what we then also do, and I will explain it in more detail later, we try to find the direct relationship between those products and the real world positive impact those products generate, like emissions avoided or water loss prevented. So we can quantify the impact. And what we see in the listed space is that still quite a lot of investors, they either do impact investing through SDGs, and we like SDGs, but for us it's more like a labeling exercise, or they look at revenues. But for us, revenues is just a starting point to identify those products and services that have a meaningful real-world impact. And then we try to find the scientific evidence to calculate that real-world positive impact. Our ambition, our target is that at least 1/4 of the portfolio, at least 25% of the portfolio, needs to be invested in impact solutions. And the remainder is then consisting of ESG leaders or companies on the path to become an ESG leader. This is how the portfolio looks like today. 52%, so almost roughly half of the portfolio, is consisting of companies that are leading in terms of ESG. And about 1/3 of the portfolio is consisting of companies that have a meaningful positive impact. These are called the impact solutions. The remainder consists of the companies that are medium in terms of ESG, but where we are actively engaging to make them an ESG leading company. Let's first go into the details of ESG and how we fully integrate it. This is our approach, and it starts with exclusion. Of course, we exclude the least sustainable sectors and activities. We don't invest in tobacco, we don't invest in weapons and nuclear weapons, etc. For us, that is, first of all, common sense. And secondly, we don't need it because the investment universe is so large. We can invest in 4,000 companies globally, small cap companies, and we only invest in 60. So why would we need to go out to the boundaries of what we find acceptable from an ESG point of view to find new investment opportunities? So we are quite strict on exclusion, but as I mentioned, by just excluding, we don't think we make the world necessarily a better place. So we have an active role as a long-term supporter shareholder to make these companies better. And that's where the second pillar comes in. That's the integration. I already talked about our ESG score. The score in itself, the outcome of the score in itself is not so important, whether it's a 4 or a 5. For us, it's just a methodology to understand where the materiality is, where the sensitive topics are, where the gaps are. So it enables us to identify opportunities for engagement, which is the third pillar. Also, with companies that are leading on ESG, still we could find opportunities for them to improve. And as we talk to companies very regularly, it's also easy to talk about those engagement or ESG improvement potentials. So that is integration. Our ESG score is linked to our cost of capital. In our financial models, where we determine a target price for each company that we invest in, we incorporate our ESG score. And the idea is that companies that are better on ESG require a lower cost of capital. And the other way around, if a company is worse on ESG, we want to be compensated for it. So the cost of capital is higher. But and again, for us, the ESG score is much more about identifying material risk in order to engage. And Our engagement is very widespread. As I mentioned, we talk with the companies very regularly, but we also don't shy away from sharing our view on paper, sending letters, sending presentations, never in an activist way, and also never immediately. So only after time we have been building a relationship with the company, and there's mutual trust, and the time is right, we start to share our thoughts. And those thoughts are also not only not activistic, but also not about how a company needs to run the business, because we make no illusions. We don't know how to run the company better than the management team. However, on a daily basis, we can compare all the 60 companies in our portfolio on investor relations, so how they communicate with the market, capital allocation, so how they reinvest to drive long-term value. Corporate governance is really important to us, and sustainability, ESG, and impact. On those 4 levels, we think we have an added value to share all the best practices we see on a daily basis across our portfolio with the companies that we invest in. So we are like a modern financial troubadour, collecting all the best ideas from within the portfolio and giving it back to the companies that we invest in. And we have noticed that companies are very receptive to that feedback. And the last pillar is actually part of integration, or part of how we act as a long-term owner. We are a shareholder, we have a voting right, and therefore we also execute that voting right. And our voting results are publicly available. When we engage with the companies, we try to be as disciplined and methodological as possible. So we don't fool ourselves over time. We developed an engagement framework and a template, and everything we do is stored in an online archive in Bloomberg. All the meetings, the minutes that we write after the meetings, the investment cases, the financial models, our ESG score, but also our engagements are all documented and archived in Bloomberg for our own access. Simply because that online archive is building by the day, so it's becoming more valuable because it has all our knowledge, all our content. I forget what I discussed 2 years ago with the company. I am a human being, and we forget things. So it's great to go back to the notes and look back at what we discussed, but it's also a way for us to track how we are doing. So on ESG, we developed this framework, and the starting point is that both the problem but also the engagement needs to be defined very clearly. And then the targets that we set have to be as smart as possible. So they must be measurable, very specific, they must be attainable, they must be realistic, and time-based. So we are very strict in what we expect as an outcome on the engagement. In terms of our expectations, however, we set them low. We never ask for a big bang overnight, simply because we have learned that that's not realistic. So we think it's much better to ask companies to make continuous but small steps of improvement. That is our approach to engagement. And we have a staging phase where we keep track of, and these are 4 phases. The issue is issued, is raised by us, is being acknowledged by the company, they are committing to improve, and finally achieved or case closed. We can also have fail, of course, and in that case, again, we will decide to sell out. This is an overview. I will not go into the details, but we always keep track of the engagements that are actively running. Then the second topic of today is impact, management and measurement. We have been developing this over time in collaboration with other impact partners like the GIN and IRIS and PRI, as I mentioned. where for us intentionality is important. So we need to see that the impact that is being generated is the consequence of an intended decision by a company to create impact through a certain product or a service. If it happened to a company, it's great, of course, but the company has not been driving that positive impact. Secondly, we look for active levers to create more value, to enhance the value. So here is where engagement and impact comes together. We identify an impact, and then we engage with a company to try and ask for, hey, what can you do more? How can we capture even more positive impact? And lastly, we try to quantify impact. That is sometimes quite difficult, simply because these companies are listed. Our role as a shareholder of a listed company is different than in the private equity space. In the private equity space, you sometimes own 100% of the company or a majority, but at least you have a seat directly at the table, and you can now more directly request for certain data or information. In our case, in the listed space, we are much more distanced. So we need to do a lot of talking and explaining to companies why it is important to disclose certain data. But by doing it, we have noticed that that's quite an interesting discussion to have with companies, because sometimes they have not even realized that this is the way investors look at it, or that they appreciate the impact being generated by the company. When we measure impact, we use the theory of change, and we find the direct relationship between the product and a metric or certain metrics, certain KPIs, to capture real world impact, like emissions avoided, water loss prevented, saves lived. So mostly on the social side, it's more difficult to measure, but we try to do that, and we try to back it by academic research. Masato-san and I were talking about a company in our portfolio. It's a German company. It's a nice company called GEA. And GEA is a producer of equipment for the food and the pharma industry, worldwide, very strongly positioned. And when talking to them, I was trying to seek for information on how much impact certain new product innovations had in terms of energy saved or carbon emissions reduced. And then 1.5 years ago, they said to me, we developed something new. It's one single product line, or it's actually a label, a product label. It's called Add Better, where these are certain products where they clearly identified the impact that those products have on reducing water consumption within the factory, on reducing carbon emissions within the factory. Only these products where it's very clearly a very clear contribution, they are labeled add value. That is externally being validated, so being calculated, validated, and certified by a third-party university-backed research institute in Germany, TÜV. And then the label is put on the product, and the certificate also is presented to the client. And the interesting thing about it is that it shows clients that they are not only buying a piece of equipment, but they can also see how much positive impact it creates. And for many corporates, at least I see that in Europe, I think also in Japan, many corporates are committing, for instance, to net zero in 2050, and they set intermediate targets towards that net zero. If you are a plant manager and you can see that by replacing certain equipment, you are on your path to net zero, yeah, it's very insightful. So I liked that idea. I also like the idea of the external validation, because it prevents the whole greenwashing discussion. Like, okay, yeah, you can say this is very sustainable, but who knows? And in their case, it's externally validated and certified, which is what I really find interesting. This is one of the companies in our portfolio. It's a US-based company, quite sizable, at the higher end of our market cap range. And First Solar is a producer of utility-scale solar panels that are used to replace fossil fuel-based power generation. So in the case of First Solar, this is a very clear-cut example. It's not the reason why I brought it, but it is an easy example because you can easily calculate how much carbon emissions are avoided by replacing fossil fuel power generation by solar panel, utility scale solar panel. In the case of First Solar, there are additional positives because they are a thin film producer. And as opposed to most silicon alternatives, that is even lower in terms of carbon emissions and also water consumption. So it's behind this, there's a very detailed calculation, but for presentation purposes, I wanted to show it to you. We are currently in the process of finalizing our first ESG and impact report. Once available, I can send it to you through the organization if you are interested. That will be published in a few weeks from now. And that is the ESG and impact report for the Lightrock Global Small Cap Fund. So that's only the listed side. And later this year, we will publish a consolidated ESG and impact report where all the positive impact from all the Lightrock group companies will be consolidated. This is the outcome when you would stack all those impact solutions in our portfolio, the 1/3 of our portfolio where we identified and quantified the positive impact. So this is what it gives you. And here we calculate only our equity stake. So we calculate how much equity we invested in the company and then multiply it by the total impact to say this is the positive impact that we can claim based on the equity that we invested in the firm. So it's for emissions avoided, water loss prevented, waste recycled, and as you can see, also some social impact KPIs. And this will be published later this year. With that, I believe, yes, we have come to the end of my presentation. Exactly 30 minutes, more or less. Thank you very much.
Thanks for your perfect time management. そうしましたら、ちょっと Q&A セッションに行く前にですね、ちょっと打足になってしまうかもしれないですけど、私の方で今のプレゼンテーション、日本語で要点をまとめたところを簡単に口頭でお話しさせていただければと思います。もし何かミスしてたら、オーディエンスの皆さんから追加いただければと思いますけれども、まずですね、ライトロックさんは、20年前にリヒテンシュタインの、ロイヤルファミリーの、財団からスタートしたインパクトファンドですと。で、そこから、最初はフィランスロピーでやってたんですけれども、フィランスロピーではなくてちゃんと財務リターンも求める方がサステナブルに社会を変えられるということで、財団ですけれども、そういった形で始まりましたと。で、そこからスピンオフして、普通の金融機関になっていったというところですと。で、特に最初はプライベートエクイティ、グロースエクイティですね。で、グローバルで投資をしてきたんですけれども、2年前から、リステッド上場株も始めましたということです。で、その2年前の上場株のプラクティスを始めるために、呼ばれたのがクリスさんで、そこから立ち上げてやっていくということです。で、そのリステッドエクイティの、ファンドは、先ほどちょっとお話をお伺いしたところですと、1000億円ぐらいですね、日本円にしての、AUM で運用されていて、ポートフォリオが60社、で、そのうち90%が、ごめんなさい、60%が、北米、30%が、ヨーロッパ、10%が日本にも投資をしているということでした。で、先ほどちょっと話聞いたんですけど、今週ですね、1週間日本のいろんなポートフォリオ、および投資候補先とも面談しているということでございました。はい。で、投資のストラテジーとしては、基本的にロングオンリーでして、ロングタームの保有を前提としているということと、 アクティブエンゲージメント、アクティビストとは違うんですけれども、アクティブエンゲージメントということで、クォーターに1回、全ポートフォリオと話して、いろいろとサポートしているということで、非常に一生懸命エンゲージとされているということでございます。そうですね。あとは、プロダクトの特性としましては、ESG とインパクトを、かなり本気度高くやっているというところなんですけれども、インパクトオンリーでもなく ESG を混ぜながらやっているというところが現実的なアプローチとして、興味深くお伺いしまして、今のポートフォリオのうちですね、約、えごそうですね50%を、違う。50%ですかね。いや、50%が ESG リーダーということで、彼らの独自の ESG スコアリングで平均以上の点数を取っている会社ということですと。で、30%がインパクト、企業ということでして、残り15%は ESG リーダーになるポテンシャルがある、エンゲージメントを通じてポテンシャルがある会社ということで構成されております。ESG についてはですね、やり方としては、ESG の投資のプロセスとしては、まず、ネガティブスクリーニングがあって、で、その後、インテグレーション、ESG 判断を財務モデルに、入れていくような判断の仕方、特にコストオブキャピタルが下がることを前提に、バリエーションモデルを組んでインテグレーションしているということでした。で、その後、投資後に、先ほど申し上げましたようなエンゲージメントを行いまして、投資先のですね、CFO さんなどと、キャピタルアロケーションの仕方ですとか、コーポレートガバナンスなどについて、サポートしていくということでございました。はい。で、インパクトについてはですね、3つの、条件、クライテリアを持ってまして、1つはインテンショナリティ。これインパクト投資、ご存知の方よく知ってるお話ですけど、インテンショナリティ。で、2つ目が、ちょっとユニークだと思いましたけど、バリュークリエーションということで、彼らが介入して、バリューを作っていける、余地があるかというところも条件として、これはインパクトと財務のバリューということだと思うんですけど、作っていけるところも見てる。3つ目がメジャーメントでして、定量的にインパクトを測れるというところも見ているということで。ただ、プライベートエクイティのインパクト投資と違って、シェアも少ないので、どれだけメジャーメントをなんていうんですかね、エンゲージメントして取っていけるかというところには一定の、距離がありつつも、それができることを、もしくはやる気があることを一つの条件としているということです。あとはですね、この投資のフレームワークの中で、インパクトの、これ、セオリーオブチェンジを使ってインパクトを評価しているということで、投資先のプロダクトサービスが、インパクト KPI とどうつながっていくか、っていうところを、ちゃんと見る。もしくはそれをちゃんと作り、込むってことをやっているということで、非常に、定番のインパクトメニューを上場株としてもちゃんとやられているということでした。で、2つ、投資先の紹介がありましたけど、1つはゲアというドイツの会社でして、こちらは、マニファクチャリングのエクイプメントですかね、を作っている会社ですけれども、その過程で、GHG ガスですとか、水の使用が非常に低い、ということをやってまして、それをドイツの、アカデミックインスティテューションとパートナーシップを持って、それを第三者でちゃんと認証した上で、ラベルをつけて販売しているということで、ネットゼロを目指すいろんな会社さんに訴求力を持って販売しているという、会社のご紹介があったりですとか、次がファーストソーラーですね。アメリカの会社ですけれども、新しい技術のソーラーパネルを販売していますということで、インパクトとしては、グリーンハウスガスエミッションのアボイデですとか、ウォータープリントの低さというのをインパクトにしていました。で、最後、ファンドの中でのインパクト KPI のコンソリデーションということで、これはなかなか単なことじゃないと思うんですけども、横串で、インパクトの指標と、ポートフォリオ横串のインパクトの指標として、こういった環境、ソーシャルの、KPI もファンドとして持っているということで、ここまでするのは結構大変だと思うんですけれども、非常に先進的にやられているということでございます。ということで、こ ここから Q&A セッションに移れればと思いますけれども、ちょっと私の方で桜の質問もいくつか用意はしてるんですけれども、会場を見渡す限りですね、もうそうそうたる方々がいらっしゃいますので、インパクト投資やられてる人も、金融機関としていらっしゃいますし、発行体の方もいらっしゃいますし、インパクトのこのガイダンス、ガイドライン、エコシステムビルディングされている方もいらっしゃいますし、ぜひ、ご質問いただければと思いますが、日本語でも英語でも、どうぞ。
オンラインの方、もし声聞こえにくいようでしたら、先ほどせ。
Yeah, thank you very much, Chris. Be curious to hear how you do short-term versus long-term impact. Obviously, there are companies out there that are like, if for example, planting more trees or something like that's just very short-term immediate. But I guess there are a lot of other companies out there where you're trying, they may not have impact for 5 years, they're trying to do systemic change, something like that. So how do you balance your investing portfolio by that? And then to measurement as well.
Good question. As we are long-term oriented, long-term investors, it makes it more easy for us to buy into the long-term opportunity. So we do not necessarily need to see immediate impact. We are fine investing in companies that are investing for the long term in order to generate positive impact. But here it's important to see the intentionality also and to see how realistic that opportunity actually is. So we spend more time then to understand the opportunity that is in front of us if we cannot see it immediately. By definition, our portfolio is well spread across regions, sectors, ESG leaders, and non-ESG leaders that we need to or want to become an ESG leader and positive impact solutions. So always we accept that it will be a mix of those, including short-term immediate impact and long-term opportunities, as long as we are convinced that the long-term opportunity is realistic to capture. We are fine investing in it for the long term. In our engagement, it's different though. We need to see that the ESG improvers are committed to and becoming ESG leaders within a 3-year time frame. That's what we set ourselves, because we don't want to fool our clients and ourselves by saying, well, we are investing in these companies that will become ESG leaders, but it's an everlasting promise. We don't want to make that everlasting promise. So in the case of bringing companies to the next level on ESG, when they are not yet an ESG leader, we are less patient, but still allow companies and ourselves a 3-year time frame. And also here in our expectations, we are more modest, because we simply realize nothing happens overnight. So asking for a big bang overnight change is just not realistic. So it's not a very accurate answer to your question, but it's a mix, and we accept it since we are a long-term shareholder.
すみません、事務局です。こちらちょっと録画をしておりまして、最後まで録画を上げてしまいたいなと思っておりますので、もし録画に残るのが嫌な方は、後からこっそりしてくださいと思います。
Thanks a lot for the presentation. Just 2 simple questions. What would be the North Star impact global metric that you might keep track of within the fund? For example, it could be like carbon emissions, it could be like, let's say, jobs that got created in underserved markets. It could also be like reforms in the governance of the corporate, life cycle. And the second one is, what gap did you see in the public equity space, especially in the global small caps, which you felt that Lightrock's impact lens could uniquely address and fill?
Yeah, let's start with the second question, because the first I didn't get completely. So, but let's first get to the second one. The gap identified is what we noticed is that small cap companies, again, tends to be overlooked, under-researched, also sometimes understaffed. So the good thing about a small cap company, in my mind, sometimes is that they are always constrained on resources, because that, in essence, makes them focused on a specific niche. So many companies in our portfolio, therefore, are able to become a market leader, sometimes even a global market leader in their particular niche. The flip side of that is that there's typically not many resources left. There's no big departments collecting ESG data, preparing reporting, etc. So that is the challenge we see. That at the same time is an opportunity, because if nobody looks at it and nobody is doing it, and you are coming from a low base, then there's a lot to improve. So that's the opportunity that we identified. We are helped by regulation in Europe, regulation on reporting, either on a fund level. We have SFDR. We need to report on certain ESG metrics, adverse indicators, for instance, and also companies need to report on sustainability metrics, like we are increasingly have been seeing that in the US, although maybe there's some pressure being taken off at the moment. Still, we believe in the long-term development. So we are helped by regulation. Transparency is improving, and what we notice also, and we talked about it during a prior meeting, is that automation and data analytics is also helping smaller companies these days to be better in capturing the data, presenting the data. Just on a micro level, we just, as a fund, had to report on SFDR, and that's on our KPIs, on our sustainability KPIs. In the past, you had to collect all the data manually. It was very tedious, but now we insource, so we buy a data source from Sustainalytics. We automatically link it to Bloomberg, and it generates the report. So by better data, big data capabilities and analytics, I think it's becoming less cumbersome for small cap companies, and therefore they can catch up more quickly. But again, the reality is that we see that many small cap companies are behind and need to catch up. So that's exactly the gap that we identified. And then secondly, because our philosophy is based on long-term active ownership, we are close to the companies that we invest in. We see that we can have very effective engagements. In the large cap space, I think it's quite difficult to engage with the Coca-Colas of this world to try and ask them to improve or to change. In our case, we noticed that, as I mentioned, we talk to companies every quarter, very often directly to the CEO, CFO, or board members, and that makes them very receptive to our feedback. So the philosophy of being long-term oriented really helps, because the companies don't feel we are a threat. We are not a short-term activist, but we truly try to help them. And in a market, an equity market that has shifted away to passive investing, that gap that you alluded to has become bigger and bigger, we have noticed. Sorry, the first question, I didn't get the first part of it.
What is like the North Star metric?
Impact KPI.
Impact KPIs that you are tracking internally. Like, are there any KPIs that you're going after?
Impact KPI. So maybe change the slide.
Yeah, exactly. So these are the KPIs. We try to do it on a bottom-up level. So for the listed equity side, and that also relates to your earlier question, it's our portfolio is more broad-based. We are more well spread across regions. Companies itself are more diversified compared to the private equity side of Lightrock. When you would look at the private equity side of Lightrock, there are more top-down North Star KPIs dictated, basically. And we try to go the other way around. Bottom-up, we look for opportunities where companies do generate a positive impact. Then we measure. Then we take a step back and we look at, hey, how does it look on a consolidated level? Do we identify certain KPIs that are recurring multiple times? and including, I think the most obvious one is emissions avoided, where we have various companies in our portfolio, including First Solar, but also West Fraser, which is the biggest wood-based panel producer in North America, replacing concrete and steel structures with wood-based products, for instance, to lower the carbon footprint. Befesa is a very nice German listed company. They are the world market leader in zinc recycling. So there's two ways to produce steel, and I like to talk about companies that we invest in. That's what I'm passionate about. I will talk for 2 minutes about Befesa, and then you need to stop me, otherwise I keep on talking about it. Befesa, there's two ways to produce steel. You can either produce virgin steel by using pig iron, and that depletes the earth, but you can also use recycled steel from old cars and washing machines. By now, in Europe and in the US, a lot of the steel, about 50%, 40-50% of steel, is from recycled steel. The issue, however, is that cars these days are galvanized with zinc to prevent corrosion. So if you throw in cars in an oven, then you do not get pure steel out of it. You get a byproduct. It's called steel dust. And steel dust is a hazardous waste. In Europe, you cannot landfill it. It's not allowed. In the US, you are not allowed to landfill it. Even in China, it's now on the list of hazardous waste that is not allowed to be landfilled. Befesa is a world market leader in collecting steel dust from secondary steel makers, extracting the zinc content out of it and resell it. So it's a pure play circular economy play, and really nice company. By doing that, they do not only recycle waste, prevent hazardous waste to be landfilled and to solve the solution, because that's not allowed, but secondary steel and secondary aluminum is significantly lower carbon intensive than primary materials. So also in the case of Befesa, we calculate the third KPI, and that's also emissions avoided. So sometimes it's multiple KPIs, waste, recycle, but also emissions avoided for the same case.
Maybe let's take 2 more questions. じゃあ、3つ。
Thank you for the presentation. I'll try to be quick. I have a question about the social impact KPI part. And as you invest in mostly developed market, and then when you kind of set the baseline of this, like access to the healthcare or the income improvement, do you set, like, how do you set the KPI as like baseline? Like, do you do like kind of on a subcommittee, or do you actually kind of assess who you actually approach?
Yes, so that is the way it's done. It's so you are right. Lightrock also has private equity funds that are dedicated to emerging markets. We have a fund and a team based in India, in South America, in Africa, where and that's also the prior question, where there's top-down KPIs dictated access to healthcare, access to also the finance industry, for instance, access to education. In our case, investing in developed markets, that baseline is already high. But that doesn't mean we cannot quantify it. It also doesn't mean that we cannot grow the impact. So in the specific case of these social KPIs, we are engaging in discussions with companies. Hey, how can you extend your reach? For instance, why don't we launch this product also in emerging markets to enable access? Because the companies that we invest in, they are listed in developed markets, but sometimes they are globally active. So in that particular case, we do have discussions about why don't you also launch this product in Africa to provide vaccines or screening equipment to hospitals to provide access.
very much for your informed vision. So you mentioned that you're investing in the small cap companies because they are under-researched and no one in the market has realized there's a potential for growth, right? So as an investor, how would you let the market know that this technology or services, the impactful services are like worth investing? Would you do something rather than in addition to engagement, would you do something to signaling the market?
What we do is mostly the signaling to the market is what we ask companies to do. So it goes back to the topic of engagement and in particular investor relations. And investor relations is a broad topic, but in many cases we also engage with companies and we say, hey, why don't you better communicate about the positive impact that you create? When I first spoke to Befesa, that was in 2018, they said, well, we are just an industrial waste collection company. And I said to them, hey, why don't we calculate how much carbon emissions avoided you generate? And then you can start communicating about it. So they hired a consultant who did the life cycle analysis and calculating the positive impact created by Befesa, and then they started communicating about it more. And increasingly, I know investors with an ESG mindset or an impact mindset now starts to realize, hey, Befesa is an interesting company. We also engage with the rating agencies. Because you mentioned correctly that indeed small cap companies are under-researched, not only by the brokers, also by the rating agencies on voting, but also on ESG. Sustainalytics is one of the bigger players. MSCI is also a very big ESG rating agency. And what I've noticed is that especially the big asset managers, they need to cover a lot of companies, or the passive funds, they have an automated ESG overlay. They automatically rely on those third-party rating agencies. So we then read the research by MSCI and Sustainalytics. In quite a lot of cases, we identify either gaps in their analysis or the data is outdated or just incorrect. And then we both engage with Sustainalytics and MSCI, like, hey, we identified this mistake in your research. Can you please update it and update the rating? But we also engage with companies. And so what I oftentimes like to do, I look at companies within our portfolio that have a low third-party score by Sustainalytics. Then I make an analysis, a gap analysis, and I present it to the company, because oftentimes they don't even know or they don't care. But then I say to the company, increasingly investors are integrating ESG metrics into their analysis, so it directly affects your cost of capital. So by addressing the third-party ESG scores, you can lower your cost of capital and then the value goes up. And we try to help them by analyzing the gaps identified by Sustainalytics or MSCI that need to be closed in order to get upgraded.
Okay, thank you very much for your presentation. My question is about your positioning vis-a-vis your portfolio companies in terms of engagement, because we always hear about the investors in the public space talking about the importance of engagement. At the same time, we all know that that may be limited because the public market share of the portfolio companies, and they may be pulled into different directions. You may want to see more impact. Others might want to see more improvement in governance structure. Others might want to see more like a solid business plans for short-term returns. And so why do they want to really listen to you and engage with you more meaningfully compared to other investors out there?
Yeah, that's a very good question, and thank you for raising it. It first of all helps that we are truly long-term oriented. You referred to some investors, they care about the short-term financial performance. Of course, we also care about financial performance, because ultimately a company must be financially sound. But next to it, we think long-term value can be generated by doing better on ESG and impact. And maybe Japan is a good example, because what I've noticed is that our philosophy is very close to the philosophy of a lot of Japanese companies, more long-term oriented, more stakeholder oriented, where many Japanese companies are telling me that they visit or face overseas investors from the US, and they immediately and only ask about the buyback. I'm just maybe exaggerating a bit, but it helps us in positioning ourselves as a long-term supportive shareholder. But you are right, we always need to balance our requests and asks. And we also understand that there's other investors asking other stuff. For us, it's important to make an assessment and determine where is the most material risk or the most material opportunity. And from there, we take our engagement. So we try not to ask too many things at the same time, and we don't try to ask too much. So it's indeed a balancing act, which is the difficulty. But the good thing is, I guess, is thanks to our philosophy and long-term oriented nature, we see that we have good traction with the companies that we are investing with.
はい。それでは、すみません。時間になってしまいましたので、一旦 Q&A セッションはここまでとさせていただいて、会場が6時までですね、ネットワークにしていただくんですけども、その前にですね、最後にこの会場をお貸しいただきました、共済の SBI 新銀行の長澤さんから、お話、クロージングお話しいただければと思います。
大変僭越ですけれども、はい、クロージングしますということでですね。Thank you very much for indeed. And as a lender, we recently struggle to maintain the meaningful engagement with our customers. So engagement is a challenge for us, especially lenders. But today's discussion is very insightful and encourages us a lot. Thank you very much indeed. それでは、はい、これで終わりたいと思います。ちょっと入場とかですね、すごいご不便かけたところもあると思うんですけれども、QR コード、必ず捨てないで、出るまでお願いします。はい、1回の、はい、ところでよろしくお願いいたします。はい、じゃあ、それじゃあ、ネットワークということでよろしくお願いいたします。どうもありがとうございます。
Thank you very much.
Yes.